If you manage your own investments but struggle with a trade-off between performance and principles, this is for you. The Rocklinc Principled Equity ETF, ticker RKLC, was built for investors who want strong equity exposure without compromising their convictions. RKLC applies Rocklinc's time-tested approach with disciplined screening, long-term thinking, and a principled investment framework so you can feel confident in the investments you hold. If you're a self-directed investor looking for a more intentional ETF, learn more at rocklinc.com/ETF or contact the Rocklinc team at info@rocklinc.com. And we're back for more on New Stock Saga 960. And by the way, I have invested in that Rocklinc fund. I'm very happy that I did. Very rock solid. And Jonathan, I'm joining us. He's the CEO and president of that terrific company, Rocklinc Investment Partners, also a sponsor of this show. Welcome, sir.
Good to speak with you again, Mark. Another week has flown by, and looking forward to what happens this week.
We saw a bit of a rebound, actually quite a decent rebound last week, didn't we? So for those who were watching their investments being eroded because the markets were getting hammered, or mainly because of the war, high gas prices, high energy prices, oil prices. And so I know nobody likes to make predictions, but any expectations? Do you think the rally is going to continue for a while?
Yeah, I think when you look at the valuations in the market, the stock valuations, so we spend a lot of time looking at whether it's price earnings ratios and cash flow yields and so forth, all these different measures. The stock market is not inexpensive, so it has done well. So I would caution people to really be careful that if they're investing, and they should invest, they have to put money aside, just make sure you are conscious about valuations and you're trying to find places where maybe they haven't gone up as much, things like that. There will be, if Trump could solve this, not solve it, but get rid of the IRGC in Iran, I think there might be a relief rally there because it takes out a tremendous amount of risk in the market and ongoing funding of terrorism around the world and all of the negative effects of that. So that certainly can move the market up. And the U.S. economy, contrary to what most people have said, is actually doing quite well. It's chugging along quite nicely, and they're making the adjustments that they need to that economy. So I just think you just need to know where you're investing, be careful, dollar cost average, don't just jump in, and don't jump out either, because the news cycle is so short term and it's up and down. And you have to take a 3 to 5 year look when it comes to the stock market. Otherwise, you're just going to get whipsawed. And we've told people, just don't jump into oil because it's going up. If they solved a problem there, it's coming back down again. If you're going to be in that sector, know why you're buying the company you're buying. Make sure it's cheap. Make sure it can continue to grow its reserves, its production, all of those things. Otherwise, you just don't jump in and out of the marketplace. It's going to continue to be volatile with a lot of the news that's going on.
Yeah, it looks today like the markets are in a holding pattern, I want to say, like down a little. The Dow is down 50 points, which is like 0.1%. The NASDAQ is down a little more, maybe a little less than 1/3%. So these are not huge moves compared to what we've seen lately. We have seen oil bounce back, though. It's up over 6% today. Gold down $43. Crypto's up. Surprisingly, I'm a little bit surprised by that because it was down earlier, but you never know with crypto. It'll just wild swings intraday. So it seems like the market is waiting to see what happens next. What do you think?
Yeah, there's no question about that. And I think the one thing you should take from the market, because it hasn't sold off much. In fact, last week it hit all-time highs again on the NASDAQ and also on the S&P 500. It hadn't quite hit the high on the Dow Jones. And so what it's telling you is the market's actually saying that what Trump and the Israelites have done in terms of the war in Iran, they've actually inflicted serious damage. And a lot of the stuff you have coming out of Iran now is more propaganda. And I think the Americans have done an amazing job along with Israel in terms of the damage they've inflicted on Iran and the control they have over that area. Clearly, they need to get the Strait of Hormuz opened, but I think Iran's is gasping at this point, and we'll see what happens. So the market's being more optimistic in terms of how it's looking at this clearly. It's not following the mainstream media, that's for sure.
Yeah, absolutely. Last week I saw an interesting story and talked a little bit about it that Ontario now qualifies as a have-not province. I never thought I'd see the day, and yet here we are. That of all the provinces now, Ontario has joined the have-nots. It was a head shaker for me. But we have Fraser Institute findings on the 10.5 billion in extra equalization spending since 2018, 2019. Who benefited, received extra cash? They have not provinces. These are the ones that get equalization. Quebec, by far the latest recipient overall. Ontario has been a recipient in recent years. Manitoba, Atlantic provinces. Where does that leave? The West, I guess. That leave Alberta, where the oil is produced, most of it. And you get Saskatchewan, which is Saskatchewan used to be a have-not province too, depending on what crops did from year to year. And then BC was usually a have province. Most of the country though gets equalization.
I know it's incredible. You look at once you get below the hood here and take a closer look at this, it's really quite something. So that report that came up at the Fraser Institute is saying that extra 10 billion that's been distributed, say over the last 6-7 years, is because of this model they have. So the equalization model they have is it just goes up with nominal growth. It just keeps going up year after year. And what they've said is because of this built-in growth of the equalization payments, they're now around 25 billion a year, that they've paid out an extra 10 billion more than they probably should have. But then you get below the surface and you go, how much have they paid out in equalization payments over, say, the last 10 years since Justin Trudeau was prime minister? $200 billion has gone out in equalization payments, Marc. $200 billion over the last 10 years. So 20 billion on average. It's now running 25 billion because it keeps going up. But half of that money, 50%, a little over 50% went to Quebec, over $100 billion to Quebec alone. And Alberta, of course, is funding a lot of this. They've funded over the last 10 years over $40 billion into this equalization slush fund. $40 billion. And BC's put a little bit in. BC and Saskatchewan are net outflow from them. They don't receive, but they don't really pay an awful lot out. But Alberta is the big one. And then if you go further and you say, okay, forget the equalization payments, let's look at how much revenue goes from Alberta to Ottawa, and then you compare what comes from Ottawa back to Alberta, they're negative 244 billion over the last 15 years. Okay, so if you go back 15 years, 244 negative. When you think of Alberta wanting to leave, and you think about the fact that they could survive quite nicely, especially, of course, if they were paired with the United States and had the benefits of that. And then if you look at Quebec, receiving 100 billion in equalization payments over the last 10 years, and then who knows how much net federal money that they've received on top of that. And they won't let a pipeline go through the province, and they put up all these roadblocks constantly, and they're very difficult to deal with. So you can see it's really a country that's broken, and the flows of capital that are leaving the productive provinces and going to the non-productive ones are outrageous. If you look at the Maritimes, you look at Atlantic Canada, Nova Scotia, New Brunswick, in some cases, 20% of the revenue of those provinces is coming from equalization payments. And those also, as we've discussed in other programs, those are also the ones where they've got 50 and 60% of the economy is government. What a mess across this country in terms of how it's been running its finances and then punishing the productive provinces and rewarding the sluggards and the slothful provinces.
It is astonishing. And then have you ever sat down and thought about what Canada becomes if Alberta goes? And let's just say, even think that it's possible, were that to happen, that Saskatchewan would make the same decision. Everybody, the person supplying the money, generating all those billions of dollars in transfers, is gone. And so they're not going to do that anymore. They're going to declare independence, possibly. What happens to the rest of Canada? Does our dollar go down to 50 cents? Have you modeled out what it looks like in a case where Alberta really does it and leaves?
Yeah, no, I have not done that kind of modeling, but I don't think you have to be, as you've already pointed out, very sharp to realize that if you lose Alberta and then on top of that, probably Saskatchewan with the kind of reserves that they have in uranium, oil, gas, also the plains and the agricultural products that come out of that province, it would be an incredibly serious blow to Canada. And you're talking a dollar that would be, I think, less than 50 cents. We've seen a dollar down at 60 cents back in the 1990s when we were running ourselves into the ground, and they used to call it the Northern Peso, and we could see 50% less very quickly. There would have to be a massive restructuring across this country, and we would be in deep trouble. No question about that.
I don't, at some point, somebody's going to have to consider what to do. If you've got a lot of your investments, say, in Canadian stocks and bonds and other holdings, and the unthinkable becomes thinkable, then your investments are going to take a massive hit. They're bound to. I mean,
Yeah, absolutely, absolutely. And the other problem that you have, if you're a Canadian, you have a large amount of your money in real estate. So you've already are focused and have a very high concentration in Canadian assets. If something like that were to occur, yeah, I can tell you right now, the real estate market would be a tremendously difficult challenge. So that you'd see a large drop in your real estate. So I think the best thing to do from a financial asset perspective, where you have flexibility to move and not be just concentrated in Canada, is to find investments, investment funds, businesses that are go beyond Canada, American, international businesses, global businesses, so that you can diversify at least with your financial assets. Because if you're making money here, that means your income is dependent on Canadian dollars, and your house is obviously in Canada, that's Canadian dollars. Both of those would be vulnerable in that sort of situation. So you'd want to build a less vulnerable part of your portfolio or your investments outside of Canada.
our GDP would take a massive hit. I see we've already slipped below Russia and Brazil. So in nominal terms, we are not in the top 10 anymore. GDP per capita, we're way down. Our productivity is, what I'm saying is that we're already falling, and Alberta's not even gone yet.
Yes. I mean, as you saw that RBC report probably the last week, we've chased over $1 trillion of capital out of our country. And how do you grow productivity? Capital. You have to make investments. How do you grow your GDP? You make investments. So if we're chasing investments out of our country because of taxes, regulations, we're not treating the money properly, and we're not encouraging businesses to come here and so on, then yeah, you cannot grow. It's impossible for us to grow. If we're not going to dig more holes in the ground and take advantage of the tremendous endowments that we have in this country, all of the natural resources, which we have in spades and on a per capita basis, probably more than any other country in the world. But if we're not going to develop them, and we have a prime minister that slow walks all of this and talks about how much he's going to produce and what he's going to do and does nothing, and then on top of that, causes friction between our relationship between us and the United States, even though the United States has been protecting us militarily for decades, and also we've benefited from such a large economy right next door. If we're going to irritate the U.S. and try to get more friends in Europe, where they hardly buy any of our goods, we're going to see even more drop off. So everything points to a weaker Canada, less GDP growth, less wealth production, and if we had any kind of split in terms of the country with a couple of provinces leaving, like Alberta and Saskatchewan, it would be devastating.
Yeah, absolutely. And I think people need to start thinking about that. I think we've seen a level of hubris on the part of the government, which is they're not going anywhere. Alberta's not going anywhere. Don't worry about it. But you have to start thinking, what if? You start asking, what if? Because they're already at 40%, maybe even between 40 and 45. And if the independent side does a good enough job selling this, and it starts to look a lot more attractive for probably the most conservative province in the country, where most of the seats go to the Tories. And they're starting to look at the situation with the floor crossings. They see Carney not going anywhere. He's got a majority now, which I suppose could be around until 2029. And we've seen the slow walking of resource projects, the MOU, all that stuff. The fact that Alberta would be required to build a $20 billion facility to decarbonize the oil that comes out. It's just lunacy. And I think people have to start at least looking at the reality of what might happen here and what's going to happen to the country's economy as a result of that and the standard of living in Canada, right? This is going to be the biggest wake-up call. For the longest time, Canada has had it pretty well. We've had a very strong trade relationship with the United States. We've had Alberta producing oil. And if we all of a sudden don't have those types of things, if CUSMA ends, Alberta goes, it's going to be a massive wake-up call. People are going to wake up and go, oh my gosh, what has happened? And it's going to be a sight to behold. History could be made this year. Jonathan, you know that.
Yeah, if CUSMA is not renewed, Ontario's in big trouble because a lot of our manufacturing, which is already leaving, is going to continue to go south. And there's no reason why people would be building facilities and plants in Ontario if they don't have a reasonably good free trade agreement between the countries, in particular the auto sector. Trump wants more of that manufacturing in the auto sector back in the US. And if we don't have a good reason to have it up here, that is low cost, low regulations, favorable environment for capital, a healthcare system that actually functions, then why would the capital come up here? It's going to go down to the States where you have a 10 times more of a market and it's more vibrant, lower cost structure, lower cost of capital, quick write-offs, a government that's treating you favorably and wants the growth, and you don't have all these energy restrictions. Big and serious issues for Ontario.
Yeah, Japan has already made it clear.
Yeah.
The Toyota. And they've said, look, if CUSMA doesn't get renewed, we don't have a whole lot of incentive to stay up here. Oh, I don't know.
Yeah, and what people have to appreciate is the multiplier effect. If you take $1 out of auto assembly, then of course it impacts the auto parts area. And then you impact the communities that those workers are in the stores that they frequent in terms of retail establishments, the cars they buy. It goes right. It's a multiplier right through the economy. So when you pull money out of the private sector, out of very profitable and wealth creating areas like auto parts and auto assembly, that multiplier effect is 2 to 3 times that. So it's very serious. It's not like pulling money out of the public sector. That's a good thing. Pull it out of the public sector and put it into the private sector, then you're going to get a pickup in wealth. We're doing exactly the opposite way. We lose private sector jobs, and what do? We grow public sector jobs. It's the absolute opposite of what we should be doing, and it's going to continue to destroy wealth and destroy GDP in this country.
Yeah, it absolutely is. But those government jobs are going to disappear in a big hurry if Alberta goes, because who's going to pay for those jobs? The other thing is, a province like Ontario and Quebec, they have enormous resources too. They're not oil producing places, but we have minerals, obviously, a tremendous hydroelectric capacity in Ontario and Quebec. We do have those types of things in these provinces. But if Alberta goes, it's going to be ugly. Anyway, how do people find out more about the great services that you provide at Rocklinc?
Yeah, contact us on the internet, Rocklinc, Linc in terms of link with a C at the end, rocklinc.com. And you can email us at info, INFO, at rocklinc.com, and we'll respond right away and take a look at your portfolio and give you some free advice in terms of what we think, in terms of where you should invest. And if that all sounds good, we'd love to take you on as clients.
Fantastic. Thank you so much, Jonathan. Appreciate it very much.
Great. Thank you very much, Mark. Have a good rest of the week.
And you.